Good afternoon, everyone. I'm Megan with the New York State Brewers Association. Thanks for joining this webinar hosted by the NYSBA and Mainvest. I'll give just a very brief introduction and then hand it over to Jonathan to introduce the team and talk about what he'll share, he and his team will share with you today. Mainvest is a new allied member of the NYSBA. And just to recap, what I often will say to brewery representatives is that we are not funded by the state of New York. We're not funded by distributors. We are funded by membership dues, both the brewery membership and the allied membership. We're also funded by the sponsorship and partnership program. So we take our partners very, very seriously. It's because of support like the Mainvest investment that we're able to keep our conference really affordable to most breweries in the state. It was less than $200 per person to attend our conference this past year. And that's because it's largely underwritten by our partners. So we're really thrilled to work with Mainvest. They have a super interesting financial product and financial model. New York is the second state that they are rolling this program out in. Massachusetts was the first state. They were working with nearly 20 breweries in Massachusetts already in just a few months' time, and more than 75 breweries across the country. So I'm very excited to hear what they have to say, to see how their support will help New York State breweries, of which there are now 538, help our breweries in our community to save time, save money, and grow more efficiently. So with that, I thank Mainvest for being here and for their support, and turn it over to Jonathan.
Thank you so much, Megan. It was a great introduction. It's great to be working with you all. It's a pleasure to be here. We're going to go through a quick overview of what Mainvest is. I have my colleagues, Lauren and Eric here. Eric works with business onboarding, and Lauren is our business success manager. I'm our director of partnerships here. So to give you all a quick overview of what Mainvest is, right? Mainvest is an investment platform. We're a crowdfunding investment platform, regulation crowdfunding platform that allows individuals to invest with as little as $100 into local restaurants, bakeries, cafes, breweries. And businesses repay their investors in something called a revenue-based financing, a revenue share note that we give out as a security to our businesses. Eric's going to get into a little bit more detail when we get into his section. And what's important about Mainvest, right, and how this product works and how the revenue share note works. One of the big things is, yes, you can get capital on different places. You can set the terms differently in different locations. But one of the big things about the way our platform operates and the way our programs operate is that you really get a chance to tap into your community and to connect to your communities. And we surveyed our investor communities a couple of months ago, and the impact and the change in behavior that folks' investment has on how they spend their money, right, and how they support local businesses. So 72% of our investors said their investment had a large impact on their decision to be a customer of a business. 54% said that it had an impact on whether or not they encouraged a friend or family to visit that business. So one of those things where you can get the capital in the door, and then once you're open, you really have that base of investors and that base of supporters in your community that's ready to kind of step in on day one. You're not just raising from your community, right? I mean, with Mainvest, when you're raising these campaigns on our platform, you have a platform of existing investors, right? 30,000 plus platform investors in the Mainvest platform. Over 35 million invested to date with an average raise of $78,000. And breweries are one of our biggest verticals here at Mainvest, one of the most exciting businesses that we get to work with across the country. As Megan mentioned, we've done over almost 80 campaigns, 54 individual breweries through the Mainvest platform. A number of those breweries have gone on to raise second and third, even fourth campaigns with Mainvest. So it's really something that we've seen work for our clients and our breweries in the past. Something that folks come back to us for their expansion efforts time and again, which we're really excited and proud to see. And really, it's every stage of the brewery's life cycle, right? So as little as $50,000 to $75,000 to get a new patio. This is an example from Gentilly Brewing, just north of where we're based in Salem, Mass, to purchase a new outdoor patio for the summer season. To Atlas Brewworks, which just closed their campaign down in Alexandria, Virginia, to open their second location and build out their tap room. To breweries like Eastern Market Brewing in Detroit, raising $1.2 million to open their fifth location. It's one of the largest breweries in the state of Michigan. So really, you can see here, it runs the gamut of different needs and different types. And we've designed a product that we really hope is really flexible and able to work with you at every stage of that life cycle. And just a quick example of some of the breweries. You can see more on our website if you head to the program landing page also, which is mainvest.com/NY beer, excuse me. And then I'm going to turn it over here to Eric, my colleague Eric Strader, who's going to run through a bit about how this actually works, sort of the nuts and bolts. At the end of this section, we'll take Q&A and questions from folks in the audience as well. So just hold those until after we get through these two presentations quickly.
Yes. Thanks, Jonathan. Thanks for the intro. And yeah, to everyone here, I don't know if you picked up the beginning, but I am from upstate New York originally, from Lake George area. So I grew up, when breweries really started to kick off, we go to Davidson Brewery, Davidson Brothers Brewery in Glens Falls and Cooper's Cave, like two great local ones. I was home this weekend actually, and saw some of the work that Common Roots was doing. If you're familiar with them, I know there's a couple people on the call from the 518 area code, but really excited to work with more breweries across upstate, Western New York, the city as well, and really be able to bring more of this community investment, so people can feel like they're part of these breweries. So a little bit more about how it works, and we're going to go over this quickly. For anyone who wants to learn more, we'll have our contact information at the end of this. We'll set up some one-on-one calls to kind of dig more into the specifics to see if this is the process that's going to make sense for you. But to get a sense of what a business would do as we're going through and kind of educating and learning about what the plan is going to be. What we do is we walk them through first an onboarding process. So quick screenshot there on the left. It's really us walking, talking through, what are you raising for? What terms do you think will be right for your investors? And then from there, we kind of go through a step-by-step guide here for all of the information that we actually need to collect to file paperwork with the SEC. So this is an investment security. It's properly registered and filed. We handle all of that. Mainvest is doing the heavy lifting for you there. But we'll collect things from your pitch resources to financial statements, to really get you prepared to go out and fundraise in your community. The second phase will be your actual fundraising campaign. So there's a screenshot here from an active page. If you see anything else on our website as well, it really is a combination of storytelling and then the actual security and the investment disclosure. So we'll walk you through getting all that together. But a campaign will last usually 60 days or so, where you're going out, you're getting your community involved. And Lauren will get more into this on the fundraising conversation, but really getting people involved in a way that gets them that sense of ownership. But really what they're getting access to is this, financial return over time that you're paying back. And we'll get kind of more into what the actual structuring is on the next slide. And then lastly, the repayment. So if you're going to have this platform over time, you're going to be managing this cohort investors from your community as they go through the entire repayment process. The process is simple. You'll have a little login where you just go in there every quarter, update your sales report. Our platform will process your repayments for you. But what we're getting at here is this isn't just a one-time gig where we're working with you for a few weeks or a month. We're really with you for 5-year process between raising funds and potentially paying it back all the way to the end, and doing additional rounds if more projects come up down the road and you're able to do a alumni raise as well. So that's a little preview on how the timeline of things work here. Next slide, we'll talk a little bit more about the actual kind of uniqueness of what Mainvest brings to investment crowdfunding, which is the revenue share note. This is really our bread and butter and what we've built the entire platform around to make it as easy as possible for you, the business, to go out, price your round, get really excited for what you're offering your investors, and really kind of see some of this benefit over time on how it's structured. So getting into specifics a little bit, the reason why you use an investment crowdfunding portal and the reason why you see crowdfunding in general is because businesses are taking advantage of the ability to publicly solicit. So you can actually advertise the ability to invest in your business. Outside of a crowdfunding campaign, you really can't just go online and say, hey, come invest in me. You have to have a properly registered security, and that's where crowdfunding allows you to actually go out and do that. The flexible security tied to your business performance really just speaks to the fact that the revenue share note, just based on how its name is, you're agreeing to share a fixed percentage of your revenue through our quarterly repayment process to go back towards your repayments. So you're just doing a little repayment every quarter tied to your performance. So If it's a new business that's not operational yet, you do have a buffer before your first repayment would kick in, which is really helpful if you're deploying capital and not generating revenue yet. And then for any seasonal business, which most breweries are in upstate New York, just given the seasonality and the winters we have, during times of higher revenue, your repayments would be higher. In the off season, your repayments kind of scale for that. So, that's a really powerful part of how these, the repayments are structured. If you're going to compare it to like a bank loan, that's more of a fixed schedule. Frictionless repayment. So, within the dashboard, you'll have a couple clicks. You just update a report, and our platform is what distributes all those repayments out. So you're not actually dealing with any of the checks, any of the money. You're not dealing with investors, knocking on the door, stopping by your dinner table, asking you where the money is. It's all through this platform. Very easy to get through. And then really the cool, interesting part here is we're aligning the incentives with your customers and you, the business. So the individuals, like if you do better, they know that their investment is going to end up being returned to them quicker. So they're very much incentivized. You can throw perks in as well. So membership, mug clubs, things like that. Really get this cohort of investors very engaged in the business as you're repaying them back over time. And then some of the more like banking terms, there's no collateral required. That isn't like personally guaranteed by you or the business. So it really is investment purely in the operations, and the investors are sharing that risk, which is why you pay them back a little bit of a return on top of it. But the good news is you're not putting your personal assets on the line. You're not further securing yourself. This should not get in the way of additional lending from a more of a traditional financing perspective. So there's some really business friendly ways this is structured to try to make it as as friendly to you, the business, but obviously compensate your investors fairly over time. So I can leave it with that. Obviously any questions we'll leave for the end, but just wanted to kind of introduce the revenue share now.
Great, thanks, Eric.
Yep.
Go ahead and feel free to hop on it.
Yep. And then so after, the campaign is launched and everything, you'll mainly be working with me on the fundraising and marketing strategy. I'll usually have a call with businesses ahead of, the campaign launch, just to make sure we're all aligned on everything, best practices there. But really, even before you launch, you can sort of start preparing for the fundraising and marketing portion, really, by thinking about, friends, family, top customers, who would be interested in initially, investing. We sort of like to think of the campaign like in 4 phases. And really that first phase is, your close network, who is going to invest in the campaign when it's at $0 to really build that initial momentum. And, from there, once you have a little bit of, investment in the campaign, that's usually when it makes sense, to go after if you have existing customers, announcing on social media, all of that, really try and build that traction. And then on our end, the Mainvest network, once your campaign has reached $10,000, that is when the marketing on Mainvest sort of starts. So, users that are interested in investing in breweries will get alerts that there's a new brewery on the platform. And that's really when you'll start to see more organic traction, among maybe users that are in New York, and then also users all around the country, which is always cool to see. I think, as I'm sure it's already been mentioned a few times on this call, breweries are sort of our bread and butter, and we have lots of users that are always very interested and excited when new ones pop up. And really, like, the last phase is just the urgent messaging at the end of the campaign. A lot of people sort of wait until the very end. So that's usually when you'll start to see, a lot of traction at the very end too, when sort of people have that last day or two to get their investment in. But we're here, throughout to help. We do email marketing, based on different criteria, top trending businesses and all of that. And we also usually help with like press strategy. So reaching out to local journalists about your campaign, especially if you're opening a new location or you're expanding. Usually like the local media is very interested in what's going on there. And yeah, it's just exciting too that we can promote the fact that, you have an open investment campaign and just can get other people involved. And yeah, like I said, I'm here for support throughout the whole thing. We have templates for emails, social posts, all of that. And, each business kind of has a different, strategy going into this, what works best for their customers, their community. So we can definitely come up with, personalized strategy there too.
Great. Well, thank you, Lauren. Appreciate that. And so we're going to go through now, and I think you have enough of an overview of sort of how this works. We'd love to really sort of dive into any specific questions about anything we just talked about or anything beyond that we may have missed or not covered. So feel free to either unmute yourself and hop in with a question or drop it in the chat, and we'll try to address those as they come in, folks. Or we did a perfect job and covered everything.
Are there any breweries on this call that are looking at expanding, or use the example of putting in the patio, or adding some element to your existing brewery in the next, I don't know, 6 months by the end of 2023? Any breweries on this call? Chris Spinelli asked a question for you in chat.
Yeah, this is a good one, Eric. What happens if you don't hit your target goal? Is there a minimum funding amount needed?
Yeah, so a couple things that work into the pricing of the security is a minimum target. So this is crowdfunding across the board. A business has to set a minimum target, and you do have to hit that. So usually you want to set that at what is like the bare minimum that really helps you push forward the project that you're pitching. So you do have to hit that goal. So in the scenario where you don't hit that and the campaign ends, yeah, the money does go back to the investors. So there's no one really losing out, and that really is a good investor protection, right? Like if you're saying you need $50,000 to put in a canning line and you only raise 5,000, like you really can't do the things you were pitching. So that's how that works. In you end up setting a maximum raise amount, so you do end up raising on a range. So a minimum, that's the target, that's that number you have to hit, and then the maximum, which is the nice to have. So it just helps to give you a little bit more operating capital, do things a little bit more efficiently. But there's definitely that spread that we'll talk about during the terms and pricing side of this.
And then a follow-up question. So, oh, sorry, go ahead.
Yeah, no, I was gonna say, was there a second follow-up there?
Yeah, well, what are the administrative overhead costs in using Mainvest?
Yeah, so the way the fees or costs work with Mainvest, there's no upfront costs at all. Usually we're pretty good at going through the onboarding phase and figuring out whether this is going to be a good fit for a business and find success. So we'll get through that process and launch a campaign without any cost. There's one potential fee you could have before launching, which is a third-party CPA review. So we won't get into too much of the specifics with that now, but in a scenario where you want to raise above certain thresholds, you have to have your financials actually reviewed by a third party. So that's kind of outside of our realm, just could be a separate fee. For Mainvest, for our actual fee, the success-based fee is a percentage of the amount that you raise. It works out to be about 5 or 6%, depending on how much of the money comes in from your channels versus the Mainvest channels, because we calculate it on like a blended percentage. But that's the way to look at it. So just say it works out to be 6%, you raise $100,000, it comes out of the balance when funds get transferred over. So on a $100,000 raise, you could receive $94,000 and $6,000 comes to Mainvest. One-time fee at the end of the campaign when the money comes over. The ongoing part of the repayment side, there's no fees to you or the investors. Like we're just doing all that each quarter, all through the platform. So I think that kind of outlines the different fee components.
And then a question from Randy Lewis: how is this different from Kickstarter? Great question.
Great question. And we might throw in a little slide on this going forward to really highlight why we're in this space, which is investment crowdfunding or regulation crowdfunding as you see it. Kickstarter and like GoFundMe are they fall outside of our regulatory framework because they are not dealing with a financial security. They are just dealing with GoFundMe on the donations, and Kickstarter more on like promises and perks. So where we fall in line is investment crowdfunding, where you're actually raising on a financial return. So these are true investors in your business. So crowdfunding is a kind of a broad term. That's why you always want to try to bring it back to investment crowdfunding. And a lot of that will come up during the messaging to make sure that the community really knows, like, this isn't a gimmick or a perk or free beer for life. This is an actual operational capital you're putting into my business right now, and I'm going to pay you back. And what we see with that kind of more broadly is the mindset for an investor between like more of like a perk or donation versus an investment. What you're going to see is larger average investment amounts, right? Where maybe someone's going to give you $20 for some future perk, or $100. What you see is probably around 5 to 10x that amount if they're thinking about it from an investment perspective. So what it does, it just allows you to potentially tap into larger chunks of capital, and that people can invest from anywhere in the country and still see the same return. It's not just narrowed into the people who need to come on site and redeem that. So it's just a little bit better way to, we feel, to raise more actionable amounts of money for the project.
Thanks, Eric. From Ann in New York City, I have some breweries and planning that would likely benefit. Definitely, I mean, if anybody is working with folks or knows of folks that are kind of any phase of the process, like I showed before, but in breweries and planning, we'd be happy to talk to them, whether it's for a month from now or for 6 months from now. I think just at least give them a sense for exactly how this works. So feel free, there's our contact info on the page. Eric's probably the best person to set up a call with for those folks, but feel free to make any introduction or just send our contact info their way, and we'd be happy to chat. And then from Patty Meekin, how are investors repaid? Percentage, monthly, quarterly? Great question again, just to clarify, I think something Eric touched on before. Eric, do you want to run through that again? Yeah,
so the way the repayments work, if you're comparing it to like a bank loan where you're just going to have like a fixed schedule, some combination of principal and interest, where you're paying back your bank, more than they're lending to you, right, through the interest. How this is different than that is you're basically telling your investors what their total repayment will be by the end of the repayment. So the investors will know how much they're owed, that total amount. And then how they actually will receive that amount will be over time. You're agreeing to share a percentage of your revenue. And we'll run the numbers with you during the conversations leading up to a launch, but usually it's designed to be a low percentage of your gross. So maybe 2% of gross, as just throwing out an example. So at the end of a quarter, you owe 2% of your gross. So all you would do within 30 days at the end of that quarter, you would upload a quick sales report, authorize the lump sum, the 2%, however much you owe, and it all goes through like our financial technology, distributes it to all your investors' wallets. So everyone will get their piece of that rev share, kind of proportionally based on how much they invested, right? Your larger investors get a larger percentage, but everyone will get paid along the same rate. So each quarter, you're just making that one repayment until you've hit the total amount that you owe. So you're basically just drawing that down every quarter until the debt's been paid off, or a maturity date hits. You will set a maturity date as well, which basically says, even if through that repayment process, I haven't paid back what I've agreed to, then at this date, whatever balance is due, I'll pay the investor back, and they'll recoup their return at that future date. If not sooner, if you have decided to pay off sooner, or just based on the revenue share in your sales that you've actually just paid it off quicker because you've grown faster than you expected.
And then to follow up on that, what is the typical timeline for a funding cycle? I think that may mean the campaign, but also the repayment timeline as well.
Yeah, that gets into the 3 different phases, right? The onboarding, that's the education and the document collection and filing. Usually that's anywhere from 1 to 4 weeks, depending on the level of urgency. Campaigns live for 45 to 60 days, sometimes a little bit longer if you'd like to do that. So that's 2 or 3 months there, and then the repayment is usually, we're trying to structure it around a 5-year repayment. Again, everyone's numbers are going to be a little bit different, and I think this kind of gets into really the flexibility here is the business is who's setting the rates here. It's not a bank. So you're really setting that plan timeline. So, we'll start with 5 if that makes sense. The business wants to target a quicker repayment, we'll work on the numbers and do that. But yeah, I think, all in all, I think we think a 5-year target is a really good starting point for conversations. And then, based on the feel of the business, trying to, figure out if there's any adjustments to that. But the actual timeline is the variable here, right? Because it's not like that fixed payment where exactly what the payment's going to be until the last date. The variable is your performance. So, if revenues are significantly different than what you had projected, then your timeline can get stretched out a little bit or even speed up depending on that. So I think that's the exciting part. If you truly go out and find a ton of success and grow fast and this investor group really helped with that, then those investors will get repaid back, a little bit quicker, which is nice. That's their upside.
Thanks, Eric. And sorry, I feel like I'm peppering you with questions here, but another one for you from Ken Landon. Would this platform work for a partnership buyout or a business restructure?
Probably not. I think really the main thing that we're looking for here with Mainvest, and which is more or less short for Main Street Investing, is really helping communities invest in the owner and the entrepreneur that's coming in. So for something like that, it's just not a use case that we've seen success on. If you had all of the investors and you just needed a platform to be able to operationalize it for a number of reasons, we could have that conversation. But really want to kind of stay to our roots here and helping communities really work with the business that is going to be kind of starting and coming into their community.
And then
it's not a no. It's just maybe some more information. If you want to shoot me an email, I can let you know. I just want to kind of set the expectation.
And then another one from Rich here. What percentage of your projects get funded?
That's a good question. For the ones that go live, it's about 90%. So we have a really good success rate recently because we really figured out if it's the right time or not. So a lot of what we're doing here is getting businesses either prepped or ready for a campaign. Then if the time's not right, they're not comfortable that it's investable at this moment, we don't really even launch it. So there's hundreds and thousands of businesses that have gone through like our onboarding process that just haven't launched. But usually once they launch, we're in a good spot where they can find success with their raise. I mean, breweries, I think, is much higher than that. Even breweries have done really well in that we have really good cohort of existing Mainvest investors that can usually get businesses across their finish line if the business is able to go out and get that first 20, 30, 40,000, whatever it is, in order to kind of open it up to more people on the Mainvest platform.
Okay, thanks, Eric. And I think unless anybody else has any last minute questions, I think we can probably turn folks back and give them a half an hour back of the day to stay productive after losing a Monday. But I think that is it here. So I just wanted to kind of quickly close things out and thank everyone for joining us today. We're really excited for the opportunity to partner here in New York and excited to support the craft beer industry in New York. It's obviously growing and expanding and booming right now. And I think our team is excited to kind of meet you one-on-one and get introduced to your breweries and your operations and kind of see how we can support and how we can help communities support New York breweries. So Megan, any closing thoughts or comments or anything else to
add? Just on that note, as many of you brewery owners know, the growth in New York has definitely outpaced the national growth rates. Even at our conference, which was a mere 2 months ago, we had 10 fewer breweries, licensed breweries, than we have here in New York State. So there's a myriad of reasons why the growth in New York has been faster than other states, than the national average. One of those reasons is because of companies like Mainvest that support New York. We have a very, very strong community, and that community is comprised of the brewers plus the allies. And we define allies as businesses that are looking to do business with the breweries, so the accountants, the law firms, investors, hop companies, that kind of thing. So in a perfect world, and this is how it works oftentimes, these companies support the guild. The guild is able to offer more educational resources to the breweries, help the breweries thrive. Breweries grow faster maybe than they expected, and then there's more business to go around for the allies. It's a perfect circle when it works. So I hope that many of you will take advantage of the Mainvest opportunity if you feel like it's a good fit for your business. And if not, we have other allied resources available to you. So check out the vendor directory. That's a great place to learn of new resources to help your business, your brewery, save money, save time, and grow.
Great, thanks, Megan. I also dropped the program page. We do have a program landing page, and that's a good location where folks can jump on and learn a bit more, and also see other breweries that have raised funds across the US in our platform and kind of how they've structured it. And with that, really thank you all for being here, and have a great rest of your Wednesday.
Great. Thanks so much.